All right, so I'm recording. Yeah, I'm recording. Yeah, we came a long way. So we started from December last week, and so let me just do a quick. I don't know what's called. So the reason why I actually decided to start the boot camp was because I sometime last year I was because oftentimes nowadays I really don't look at the group chat because I have lots of things going on personally. So, but I was going through the group chat. That was last year, and I was seeing a lot of people getting confused about ICT concepts, and the educators on there were teaching really advanced stuff. So the software teaching was way too advanced for a lot of people, and people were asking questions, and the questions were not being answered. And I had a small vision in my head that SMT was going to be the best group for 2020. That was the kind of vision I had. And to actually achieve that, I decided, let me just, because I actually wanted to go do some study to get myself ready for the new year. But I was like, uh, I'm going to study at the same time, try to teach people from my own personal notes what I learned from ICT all the way from the beginning. So I basically went back to the beginning of institutional course and started teaching people, breaking everything down for people step by step, the way I learned and how it can be beneficial to people. So far, the result has been astounding. Yeah, so the result is absolutely astounding. I'm seeing people sending me results absolutely killing themselves without Gene sending signals or team sending signals. And the craziest thing is, the thing I taught all these guys so far is just the basics. I decided just to cover only the basics, and with the basics that these guys learned, they're absolutely raking the market. So I was proud of the effort I put into, uh, just being committed actually to making sure that people get this skill set and it helps them, because I have this mentality that if you get the skill set, once you're able to get it, you have it for life. Okay. So what I actually wanted to focus on was to help people get that basic knowledge first. So once they get the basic knowledge, whatever you're getting from the educators or whoever is going to come to teach, the advanced stuff, they can easily grasp it because they've had sessions with me, did the assignments, explanations, asking questions. And I'm proud to say for the last 3 to 4 weeks, only 3, 4 times we missed the session. So it was pretty very high level of consistency doing sessions day in, day out, for me sessions during the weekdays, go into the weekends, trying to make sure that people get value, just covering the basic ICT stuff. And now I think just a lot of people more familiar with breakers, turtle soups, trends, going through candles, time frames, all those kind of stuff. So I actually wanted to extend out the boot camp until next week so we could all do live practical stuff of the things I've been teaching you guys for like the past 3 weeks, the basic stuff, just showing you guys that using the basic stuff can still make you a killing in the markets without even getting to all the advanced stuff. Because the basic stuff is basically summary of everything you need to know about ICT. And then the advanced stuff is more like deeper breakdown of the basic stuff. But the group actually was compromised. The channel for the bootcamp was compromised. So decided that rather than extend it out to next week, unfortunately, I will have to end the bootcamp tomorrow. So today's session is the second to the last of my bootcamp session. And then tomorrow, I'm going to end the session, after which I would once in a while pop in to teach some advanced courses. And also, you guys are also going to get me still giving out trade ideas. Probably not as often as you saw this week, but I'll still be active though. But majorly because I myself, I'm still studying and learning. So I've been behind the scenes learning a lot, trying to improve. So I have this stupid vision that I can get to ICT's level. I know it's a very crazy idea, but I've been working really, really crazy, trying to perfect a lot of things. And until then, I would not really, give a lot of trade setups and ideas and all that stuff. But so far, I'm proud of what everyone has accomplished. Every person, even the guys that thought we're not attending the boot camp, they showed me results that blew my mind. Lots of guys made more profits than myself last week. Especially this week. Taking trades, I was like, wow, I was mind blown. So it was a total success, and I'm actually happy for everyone. So what I'll try to do is encourage more of the educators on SMT. We've got Wilson, we've got Nick and Wilson. I think I could talk to them to do something like this, maybe probably once a month, just like a 1 week thing where they teach people the basic stuff. So new people come into the group, get the basic stuff. That way we create an army of people who can actually trade, all the basic stuff. That way we become the best group in IML, basically. Because basically we have if we have the private source, okay, we're doing what the institutions are doing. Okay, so we should be unbeatable in the market. Okay. So, anyways, that is my summary for you guys. I can see the chat is blowing up. Let's see what's people saying. Give it. Whoever sending guy wants the help. All right, so let's get down to today's thing. Yeah, so actually I came today not having I just wanted to do basically weekly analysis, then teach more situational stuff, and I did not really come in here, with all the diagrams prepared to show you guys diagrams of what I'm trying to explain to you guys and all this stuff. But whilst I was playing music, I found something that interested me, and decided to touch on that. So tonight, get your notepads because I'm going to cover a lot of things, weekly analysis and some other more subtle ICT concepts. So now, I taught you guys about USXMT divergence, how you can use that on the daily time frame to forecast where the market could go over several weeks, or could also indicate a quarterly shift in the market. And I went back to earlier this year, twice. We had one in September and another around March, April. USX SMT divergence on the daily time frame, after which the market trended for about 3 months minimum on each of those setups. And I pointed out to you guys earlier, last week's, that was Sunday. Okay, that's this week. So pointing to you guys on Sunday that there was another USX SMT divergence, and the first thing we're looking for price to do this week was stake out, equalize, which price nailed absolutely. And I said we're gonna most likely reach for these highs. We could come to this level and get retracement, but I'm still looking at price being bullish for the time being. And you guys actually see what I taught you last year playing out live. Okay, so you're seeing that what I'm teaching works. Okay, the concept, the ideas all work, and this is why we're bullish on DXY this week. And so a lot of people were asking me why I wanted to buy why I sent out a trade idea saying USD was going to go bullish. So I want to see USD go bullish because DXY was bullish, CAD was bearish. There was a range, and if you pay attention to what I teach you guys, in ranges, not ranging markets, in ranges, that is where institutions, rebalance price. Let me put it that way. Okay, so they often use ranges to change the trend or to make a correction in the markets. So if you look at nearly every major move in the market, usually at a range before the market turned around. So now let's look at just little examples. You can see on USD CAD, before the market turned around for itself, there was a range for the market traced from the correction. There was a range, there's a range, there's a range. So there's just a technique to looking at ranges in the marketplace. Okay. So ranges, that is where a lot of buying and selling goes into the marketplace. For the market turned around this level, range, so range. And one thing from my own experience looking at the market, going back over price action, one thing I discovered looking at price was that anytime the market is in a range, before the telltale sign that the market wants to leave that range is a power of three setup, okay, what I call week off. So I've taught a lot of you guys about week off, right? How week off is a very effective way of trading ranging markets. Let's see, like someone recall, oh, cross, okay. So let's do the cross, right. So I taught a lot of you guys about week off method, I think second week, and how it is very effective for trading ranges. How you can utilize the week off method to know where the market is gonna go. So now if you look at examples of what the week off method is, let's look at diagrams. Okay, so yeah, so let's look at this. Hopefully you guys can all see my screen clearly. In the week of accumulation breakout markup pattern, you're going to see price falls down, makes an accumulation, and then before price trades up, you're going to see that spring. Okay, that spring is what we call the turtle soup or our power of three. Institutional terms. Okay, so you have the spring, then you're going to get your breakout, then the throwback, which is the retracement back inside that range for the market to then spring up. Then you're going to get the accumulation of price, and the market is going to go up again once more, retrace, and then go up. Okay, so that basically is the week of pattern. You can go to Google this image I'm showing you. Now, if you go back to USD CAD, looking at what I just showed you guys, right? Exactly what you see on the diagram is exactly what you see on USD CAD, okay? So we have our spring here where the market makes equal lows, comes down, trades down to take out those equal lows. Now, why does the market trades down first, take out equal lows before it rallies? Can someone tell me on the chat box? Why does the market trade down first to, why did the market trade down first to equal lows to? Exactly, so this is why I teach you guys. Inside this range, there were people trying to buy, there are also people trying to sell, okay? So if the market knows it wants to go up, it has to go down first, fake everybody out. Those with stop orders, those with protective buy stops gets triggered, and then the market quickly pulls away from them. This is what you see on the week of pattern, the spring, okay? That was a spring here, right? So you get your breakout of the range. This is your breakout, okay? The market is breaking out of that range, which is what you see here. Then you get your throwback, which is simply the retracement back into the 1 hour order block. Now, I want to point your attention to something. On that day, I think the 8th of this week, that was around Friday, Thursday, Wednesday. Yeah, that was around Wednesday. You can see during London session when the market retraced back down, right? There was equal lows. So the market gave equal loads, and then why did you see me send out a chart saying set your buy limits below equal loads? Because I knew obviously there was people who also thought that the market was going to go up from this level, and as the market says to go up, they were trying to place buy orders, and market ultimately went traded down to take out their stop losses and get into a 1 hour order block. Now, who can tell me what pattern this is? What kind of reversal pattern this is? I told you there's only two types of reversal pattern in the marketplace. Okay. No, there's only two ways the market can reverse, not a total soup. It's not weak off. The equal lows getting being taken out, okay, into that 1 hour order block. That's the breaker, Zach. I told you guys there's only two ways the market can reverse, either a breaker or a failure swing. Now, explain to you a failure swing is when the market gets precisely to your level, to your institutional reference point, and then pulls away from there. But a breaker, the market attempts to get to that institutional reference point, being a breaker, being a rejection block or a order block, rejection block, any of those institutional reference points. Okay, the market attempts to reach that level, but the market never gets to that level, but rather consolidates around that level. Okay, this makes people jump into the move early, and then the market spikes down once quickly and then pulls away. That is your breaker. So I told you guys, breakers happen on all time frames, from the monthly to your monthly time frame to your weekly, daily, 4 hour, 1 hour, 15-minute time frame. Now I'm showing you an example of a breaker on a 15-minute time frame. Okay, equal lows prior to price getting into a 1 hour order block. Okay, but notice how price never trades into that order block. It just stays above the order block. Okay, so that is a trick to get people to jump into this trade. Then ultimately the market drops down, taps the order block, and then quickly rallies away, which plays into a week off chart pattern. Okay, the throwback, which is what you see here, okay, coming in form of a breaker, and then the market rallies up. Let's go back to the 1 hour time frame. Let's see. Okay, so cool. The market rallies up, then you get that pause in the marketplace. This is what you see here. Market pauses. The pause is simply to reaccumulate more long orders, and then market pauses, and then ultimately trades up. And that, people, is your week off pattern. Okay. Why is this thing? Okay. Breaking deal. Breaking. All right. So now, who can tell me what we're looking at on USD CAD? So I'm not going to say anything. You guys all give me your analysis. So what I'm going to do first is I'm going to clear out everything. Okay. So I've spent a lot of time teaching you guys this stuff. You guys should know all this. So clearing everything. This is USD CAD. I'm going to highlight specific levels, simply daily levels. Let's see, daily levels, okay. Daily levels, okay. Catch them off guard a bit. Yeah, let's keep this to this level. Okay, I see. So daily time frame to our from our daily time frame to our 4 hourly time frame, then to our 1 hour time frame. Now, who can tell me what is going on in price? Let's see. Tell me what you're looking at. Are you looking at price going bullish? Current price action, okay? Current market price. You're looking at current market price going bullish or going bearish, and state your reasons why from the horizontal lines I just drew. So let's get it popping on the chat box. Let's see. Failure swing and breakers. Break and failure swing looks like a buy model bullish. The accumulation will break off. Bullish. Equalize. No, first off, you need to state your bias. Okay, state your bias first, then the reason why you're looking at price doing what you think price is going to do. So let's take out the eyes. Okay. Accumulation in week off. Matt is using what we just said immediately. That's good. Okay. Yeah. Accumulation in week off. Okay. Looks like a buy model bullish. Okay. Break and failure swing. Matt is very close. Very, very close to what I want to see. Bullish equalize. Buying with the DXY bullish. Okay. Time frame. This is all cleared. Bullish trend, breaking market structure to the upside. Bullish overlap secure liquidity. Okay, so I want you guys to pay attention to, first, there is equalized, that is obvious. Okay, equalized at the top, equal lows at the bottoms. Okay, so you guys need to pay attention. Bearish alpha Batman taker equal lows. No, this really isn't an alpha Batman. I told you alpha Batman is to clear out a predetermined level of stops. Okay, predetermined level of stops. This could also be an alpha Batman, kind of, but there's something that you guys are not mentioning. A lot of you guys are failing to see this. All right, so let me clear this out for you guys. Okay, so the first thing you need to do when you're analyzing is your higher time frame. Higher time frame. Okay. The first thing you need to do is identify where your higher time frame premise is. So let's first off go to our daily chart and let's see what's going on. All right, so are we bullish or bearish on the daily time frame? Someone answer that question. Are we bullish or bearish on the daily time frame? Bearish. Technically bearish. Why? Why is it technically bearish, Andrew? Not bearish. Rim says bearish. Exactly. Higher low, lower low. Well, price hasn't actually created any new highs yet. Okay. On our daily time frame, still lower highs, lower lows. Okay. So everyone all agrees that we're bearish on the higher time frame. Okay. So you're bearish on the higher time frame. That tells us institutional order flow is boom, downside. So that tells you institutions are going to seek bearish or sell side liquidity in the marketplace. So institutions are going to look for sell side liquidity in the marketplace, right? So what do you think you're going to look for? Sell stops. Okay. In bearish markets, the institutions are going to gun for sell stops. In bullish markets, the institutions are going to be gunning for buy stops. Okay, so we are in a bearish market until we get otherwise, we're still in the bearish market. Now, what can you guys see around this level? What is around that level? Is that a daily high or a daily low? Let's see. Daily low, exactly. Daily low around, exactly. Exactly. Come on. This guy just caught my attention to something. So, daily low round figure. Correct. Now, we go to the 1 hour time frame and let's look at what happened in 1 hour. Absolutely. let's see. Boom, boom. Last bearish candle for the move up. Okay, so what pattern can you guys see being played out here? What did the market do when the market went up? Okay, first off, you need to identify what this swing low is. I'm looking for that word. I'm still looking for that word. No one has said anything close to what I'm expecting. Simple. Exactly. Mitigation block. Exactly. Okay. So now let me give you the pros and cons about mitigation blocks. It is not every time price is going to trade precisely to the pip on every mitigation block. Okay. Sometimes price might skip there by a few pips. Now, the logic behind the mitigation block is you want to see price get to around that level for the institutions to offload whatever opposite orders they position themselves to take before in the past. Okay? Until price tells us otherwise, this is a mitigation block. This level here. Now, the reason why I'm not assuming this is a breaker is because price did not ultimately trade past any old highs. Okay? So this is simply a mitigation block for price to retrace into. Now, notice what played out. When price got to that level, it gave what reversal pattern. What can you see? Let's see. Exactly. So price gave us a failure swing, right? Failure swing back into our 1 hour order block. Okay, so now I'm showing you guys how you should have traded USD CAD today. Okay, so I had a bearish bias going into today for trading USD CAD, but as it was NFE session, I decided to skip it ultimately. Well, it was nice to see price play out the way I want to see price play out. Now, oh, bless you. So notice how price got to that level. Round figure, there is mitigation block around that level. Price makes a failure swing. Now, the first thing we need to have to verify a failure swing is a higher time frame level. This is a daily swing low coupled with a mitigation block coupled with an institutional price number. Okay? So the first thing price did was spike that level, quickly move down below. Now, we pull up our session breaks for Friday. Let's see what price is. Now, going into London session, price created equal lows from Asia just before London, okay? Price creates equal lows from Asia just before London. Now, there's a 1 hour order block around this level, okay? 1 hour order block around that level. Price creates equal lows just around that session, sorry, just before London session. And now, immediately the clock strikes 8, okay, which is when London session is supposed to open. Notice how all of a sudden liquidity comes into the marketplace and price quickly spikes up one direction, okay? I want you guys to all pay attention to what went on here on USD CAD. So notice how prior to London open, price was basically stalling, just ranging around. Immediately the clock struck 8, the market quickly rallied and took out Asia eyes, okay? I went to this level. Right? So the market goes to that level and then just equal lows, okay? And then you have a higher time frame resistance point, which is your daily swing low plus round figure plus mitigation block, where the market showed a nice reaction away from. So that tells you this could be potentially a failure swing, right? Okay, so what the market ultimately does is to trade down into that level, okay? trade down into that level. Okay, let's see which bodies candle. So back to resistance, which is around this level. Let's actually go to our 1 hour time frame to look at what price can do. So look for resistance around here. So pretty much you have your take profit levels. Let's see. Okay, so is anyone aware of what I just did now? I basically took an arrow from the left hand side, the first swing to the right swing. So who can state what just happened? I was able to measure the move from the first swing as TP for the today's trade. Here's a cap. Let's see. Measured move, exactly. So yeah, so this is an ABCD extension. Okay, that is your what's it called? Is it ABCD? I think Elliott wave. Yeah, the Elliott wave. No, actually, I've forgotten actually. What's this called? This typical retail move. So your ABCD extensions that you get from your harmonic patterns is simply when price makes a reversal. So when price gets to a level, trades down to trades away from that level, okay, and makes a retracement. You're often most times going to see that the next swing, or sorry, the next momentum from the market is going to be equivalent to the preceding price swing. So what that simply means is when you typically get a reversal away from the market, okay, you can always set your first TP to be measured move from the initial price swing, okay? Measured move from the initial price swing. And you see how the market came precisely to this level and stalled. This is called measured move, okay? And measured move typically takes place in the market when the market just makes a turning point. So you can write that down on your notepad. Measured move usually comes into the marketplace when the market just makes a turning point, reversal, whatever you want to call it, away from the level. That is when oftentimes you're going to see measured moves, which is what we call the ABCD extensions in Forex. Facts. Yeah, fuck Elliott, fuck retail, exactly. No Elliott's wave. No. No, I think that was me not giving the correct word. It's not actually Elliott's wave. So it's actually not Elliott's wave. It's called measured move. But in Forex retail terms, they call it ABCD extension, blah, 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 blah. But we'll call it measured move. Okay. So what I'm saying is not retail BS. But Elliott's wave is actually retail BS. But what I'm saying is not retail BS. Elliott's waves, Fibonacci, Elliott's waves, Fibonacci, all the tools you're seeing to the left of my screen is all bullshit. Okay, you don't need any of them. The only thing you need are the horizontal lines for your levels, the vertical lines for your timing. That is all. Those are the only two things I use on my charts, except when I'm looking for TP levels, okay, intraday. That is when I use my Fibonacci extensions. Otherwise, I'm not using any Fibonacci, nothing, none of that, just my horizontal lines, my levels, and timing, okay? So you guys all need, after this bootcamp series, you guys are gonna start to learn about the more advanced concepts, and you guys are gonna get to the really advanced stuff, okay? And you guys absolutely saw how we crushed this week, called nearly all pairs to the peep, and AUD card actually even turned out well eventually. the only drawback was GJ minus 10 pips, and GJ and 80 cards for most people, including myself, was a poor trade. But a lot of other people were able to act intuitively and then extend their surpluses out. And it later turned out to be a phenomenal trade. So basically, this week was crazy. The account, GA, Euro odd, USD CAD, Euro pound, USD, pound USD, what else? GJ. That was almost 1,000 pips from all the analysis. Well, I basically missed Euro pound and then Euro USD. A lot of other people caught them. So I was mad pissed. It's like send out the signal, I missed them. Other people caught them. So it's crazy. But it happens a lot of times if you're trying to be very sniper in the marketplace. And so the reason why I basically decided to trade this week and show you guys the stuff was because I wanted to prove to you guys that you'll actually make it killing in Forex if you simply understand all the basic stuff. And if you go back to the recordings I shared with you guys, all you're gonna see me talking about is simply simple stuff, right? You've got your timing, equal lows, equalize, breaker, mitigation block, or bearish order block, bullish order block. Those are the only things we all talked about, and that was what we used to trade this week. Okay, so you don't need 20 indicators on your screen with different Fibonacci, with lines at every level. All those are all trash, bullshit stuff. Okay, so that was me ranting. Let's get back to concept. So I was actually talking about USDX SMT divergence. Now, what I was trying to point out to you guys is you can use USDX SMT divergence to determine when either Euro or Pound USD would make its move. Okay, so what I mean is rather than using it on your daily time frame, okay, using on your daily time frame to determine quarterly shifts in market structure, you can use that on your what's it called, on your smaller time frames, such as the 1 hour, the 15 minutes, to predict intraday moves. So that tells you where the institutions are actually accumulating price to move price. The same idea behind using the USDX SMT divergence on the daily time frame also applies to you using them on your smaller time frame. So now, whilst I started this Zoom call, you guys saw me basically draw out let's see, let's get to the 1 hour. So let's see if I can get this. Oh, come on, Wi-Fi. Okay, so we're gonna put replay around to play 29th November. Okay, 29th of November. And we're gonna compare this with Euro USD. Let's see, Euro USD. Okay, compare that with Euro. All right, so now I want you guys to pay attention to what went on Euro, okay, intraday. Now, whilst GBP USD was making higher lows, higher highs, yeah, higher lows, higher highs, Euro was making in the same time period lower highs, lower lows. Okay, so this is what we call USDX SMT divergence on smaller time frame to determine when the market is going to move. Okay, so now if I play this out for you, you're gonna see how rapidly Pound USD moves away from that level. So we could ultimately just predict that since there was institutional accumulation going around that level, the market could bounce off the, let's see, 1 hour of the block, okay? 1 hour of the block, what the fuck is going on? And we're gonna see price takeout, equalize. We're gonna see price takeout, equalize, ultimately take out, equalize, and precisely price six are equalized. So now the reason why the market moves exponentially for the next 2 days is because the divergence between Euro USD and Pound USD showed that there was institutional accumulation to the buy side. So price wanted to see buy side liquidity. Hope I'm making sense to everyone. Okay. Because I think I'm ranting a lot and a lot of people are actually not going to get. So I'm trying to make sure you guys get this. Okay. Okay. So what I'm trying to say is exactly. So manipulation the benchmark and underline. So if you look at pound USD, Euro USD, if Euro USD is making higher highs, higher lows, okay, pound USD should do exactly the same thing. Okay. So let me show you an example. Pound USD all the way from the top. I want you guys to pay attention, very close attention. Okay. So all the way from this level, let's make this box first. Okay. So inside this box, whilst pound USD was trading lower, okay, Euro USD did exactly the same thing as it should do. Okay, exactly the same thing as it is meant to do. Okay, now do you understand the reason why Euro USD does the same thing as pound USD? Someone type down the chat box. So let me know if you guys are following or. Oh, I need water. Right, so sorry, give me a second. Common sense. Let's see, chat box. Inversely correlated. Nah, no, I don't think so. Can you go over the indicator that we could have entered? Okay, Jerry trend line share manipulation. Okay, how do you know which pair is showing the real move? Reference DXY. Okay, so first off, we know what the DXY is doing. Okay, what we're looking for is for euro and pound to not correlate with each other. Okay, now if pound USD is trading up, euro has to do the same thing. If pound USD is trading down, euro has to do the same thing because they're both paired against DXY and they're both European. Sorry, not European. They're both regional currencies. Okay, regional currencies: euro, pound, Swiss franc. Regional currencies: Canadian dollar, Mexican pesos, and USD. Regional currencies: NZD, AUD. Regional currencies: Japanese yen, Singaporean dollar, all those ones. Okay, so they are all regional currencies because they belong to a specific region or a continent. Okay, so now if one of these regional currencies is paired against the base currency, which is the DXY, they basically have to do the same thing. So now if I take you to NZD USD, okay, NZD is a regional currency with AUD. So you're gonna see NZD went up, then traded down, then Friday went up. Okay, AUD is going to do exactly the same thing. Okay, and you can see AUD does exactly the same thing. Trades up, comes down, Friday goes up because you're both regional currencies being paired against the dollar. So if you have two regional currencies being paired against the base currency, which is the dollar, you want to see them do the same thing. Holy shit, this is crazy. This is crazy. Okay, so I want you guys to pay attention. So if you have notepads, bring out your notepads because I think I just did something. So if you have regional currencies being paired against DXY, they are meant to do the same thing. But in a situation where one currency is making higher high, higher low, and a correlating currency is making lower highs or lower lows, that tells you that there is institutional accumulation taking place at that moment. Write that down, okay? Make sure you're writing that down. And we're gonna give examples. So sorry, I was actually only applying this to euro and pound. I just discovered we could do exactly the same thing for NU and AUD USD. So this is a crazy discovery. Okay, so let me explain again. If euro is in Europe, pound is a currency in Europe. Okay, British pound, Britain is in Europe. Euro is European Union currency, also made for Europe. Okay, so they're both in a region. Swiss franc is for Switzerland, also in Europe. So they're both in the continent of Europe. That is why they're called regional currencies. Okay, that is one example. Now, another example is Canadian dollar is in the North American continent. USD is also in the North American continent, and Mexican pesos is also in the North American continent. That is also called a regional currency. Okay, then if you go to the Oceania continent, there's basically 7 continents involved. So we have North America, South America, Europe, Africa, Asia, Antarctica, and Oceania, which comprises basically of New Zealand, Australia, and then some other islands like that. So the 2 major currencies from the Oceania continent is the what's it called, Aussie dollar and the New Zealand dollar. Okay, so they are both regional currencies of their own regions. Okay, so now dollar is the benchmark of all currencies. So if any regional currencies if any 2 major regional currencies being paired against the dollar, they are meant to correlate with each other. Okay? Yes, exactly. So you're meant to do exactly the same thing with each other. But in a situation where one does the opposite, when AUD US is making higher highs and then NZD US is making lower highs, that tells you there is an underlying shift in market structure taking place, because you're meant to do the same thing at all times. Okay? Yes, exactly. Institutional accumulation in the sense that you're trying to move the market, you're entering new positions to move the market, to reverse the market. Okay? So you're meant to do the same thing at all times. Okay, let's see. All right, so how many of you guys are still finding this hard to understand? So I'm gonna show you live examples right now. How many of you guys are still finding this hard to understand? Before I go into examples, let's see. Okay. All right, so I'm gonna explain again. If euro, let's do this. Let's do session breaks. Do. Boom. Hopefully this compression is not. So reduce this. All right, so let's do like this. Let's do, where's the mouse? Okay, go mouse. Brush tool. All right, so let's label this euro. Okay. GBP, USD, DXY. Okay, so we're gonna call this USD and call this pound USD, and then we call this. So, all right, so in a situation where you have the pound USD, euro, and DXY, what typically happens in the market is whilst euro is going up, bullish, pound USD has to be bullish, okay? And then the DXY is bearish. Now, why is it that euro USD is bullish and pound USD has to be bullish? Because the base currency is the DXY, USD, okay? So if the dollar is weak, it is going to affect the strength of euro and pound in the sense that pound is going to move higher, euro will also move higher because you're going to gain strength over the DXY, okay? Let's see if that makes sense. Exactly. Now, what I'm trying to say is, let me give you the breakdown basically. So what happens is there's always international investors. Okay, there's people investing in different countries, foreign countries, blah, blah, all the stuff. So for example, China actually is the largest investor of US Treasury debts. Okay, China. So what basically China did was to buy US Treasury debts, okay, and that is why China is the largest debtor of debts to the US. Sorry, largest owner of debts to the US, okay, because they're foreign investors, okay. Now, like I explained to you guys earlier on the webinar, the people who move the markets aren't only the central banks, okay. Not only the central banks move the market, the central banks still has other outlets, okay? Other outlets in the form of large investors. Hopefully this makes sense to people because, let's see, going to go into a very deep rant. Okay, so now what happens is investors do transactions via foreign banks, commercial banks, majorly, okay? Now, the movement of investment from one currency asset to the next currency asset, okay, should be correlated in the sense that DXY is the base currency around the world. I told you guys the reason why, because the US dollar was taken off the gold standard in 1971 by Richard Nixon, United States president, and then he made United States dollar become the base currency, meaning all other currencies are paired to the US dollar. So the US dollar is bearish, all other foreign currencies has to go bullish, okay? Because bearish US dollar is going to be an asset class that is going to make investors not want to invest into that asset class because there's risk in that asset class. When dollar goes bearish, okay, they lose money. So what you're going to do is you're going to pull investment away from the dollar and move it into safer haven assets, which is foreign currencies, euro and pound. This is why if DXY goes down, pound and euro US fiber and cable goes up. Okay, that's like the basic explanation of why they go the opposite ways. So now, in a situation where the DXY trades lower, euro and pound has to go up. But now, if DXY is going down and euro is also going up, okay, but pound USD is going down, okay, DXY goes down, euro goes up, pound USD is going down. That tells you something is wrong because pound and euro needs to do the same thing because they are positively correlating asset classes, okay. They're positively correlated, and the both of them are inversely correlated with the DXY. So these two has to do the same thing at all times. Okay? If one is posing higher highs, higher lows, the other has to pose higher highs, higher lows. In a situation where one poses higher highs and higher lows, and the other one poses lower highs or lower lows, okay, that tells you there is an underlying shift in market structure. Now, I'm giving you guys the reason why this shift happens. Because if you have regional asset classes paired against the US dollar, you want to see them do exactly the same thing. Now, Euro USD might trade higher, and then NZD USD might trade lower in the same time period. Okay, that might be due to something, some kind of fundamental weakness in New Zealand dollar. But at the same time, you're going to see pound USD also trades higher. But if Euro USD is trading higher and pound USD is trading lower, that is not meant to happen. Because fiber and cable are meant to do the same thing. So what I want you guys to do is go back to your chart and look at every instances where fiber and cable never when one's posing higher highs, higher lows. The next one is doing the opposite. You're gonna see that subsequently there was a trend change. Okay, so after this class session, just go back to your chart and do your own research. You're gonna see that consequently there was a trend change. Sorry. So what this is called is relative strength. Just like the way Wilson utilizes the RSI. Okay, when RSI makes lower lows, lower highs, and maybe Euro is making higher highs, higher lows, that signifies that there's going to be a trend change. That is the same way you also utilize that for pound USD and Euro USD. This is the true relative strength index. Okay, the true relative strength index is this. I'm going to show you examples now. So my voice is cracking because my throat is so dry. So okay. Well, the reversal in the pair doing the opposite, I don't get. So let's go to pound USD, which is where we had all the shit is come back. So let's go back to where we stopped at. We just this. Okay, go here. That's compare Euro USD. So we're gonna compare Euro. Let's make this yellow. Okay. So what we're gonna do now is compare pound with Euro. Okay. So now I don't know what's going on. Let's see the charts. Now, what I was trying to point out to you guys is notice how when pound USD drops, okay, makes an eye, drops, makes an eye, drops, makes an eye, drops, makes an eye, drops. Euro USD, which is your yellow line, does exactly the same thing, albeit in a different intensity, but it does exactly the same thing. Okay, so can everyone all see this? I'm trying to make sure everyone gets this once and for all. Can you all see in this red box how pound USD, Euro USD does exactly the same thing? Okay, I want to get your yeses. Okay, let me know you guys are actually getting this. Let me get yeses from you guys. Cool, perfect. So pound USD, Euro USD does exactly the same thing. Now watch. Pound USD then poses higher lows. Okay? Pound USD poses higher lows in the same time period where Euro posed lower lows. Okay, higher lows, lower lows, higher lows, lower lows. What then happened in the market? The market shot up quickly. Boom. Boom. Okay. Euro USD was still on a downtrend, but quickly rallied up. How many of you guys can see what just happened? I want to get yeses. Exactly. EU does exactly the same thing as GU. Exactly. So pound USD poses higher lows in the same time period where Euro USD posed lower lows. That is your relative strength index, USDX SMT divergence. You're always meant to do the same thing at all times. Now, notice how when Euro starts to trade higher, they do exactly the same thing. Low here, low here, low, 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 high, 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 low, low, trade up, trade up. They do exactly the same thing until you're ready to reverse. Okay? Okay? How many of you guys are all getting this stuff? This is crazy shit. It's crazy stuff, actually. So before Euro USD and Pound USD changes direction, you can know beforehand. Because now what you're actually looking at is institutional RSI. What you're doing is looking at institutional RSI. Okay? Exactly. So now, notice how in the same time period, okay, watch. Pound USD makes what? Lower highs. And the same time frame, Euro USD makes higher highs. Divergence. You're meant to do the same thing. What then happens? Market trades down sharply. Boom. Market trades down sharply. Boom. Okay? 1 hour time frame. Boom. Now, in the same time period, Pound USD makes higher highs. Euro USD makes lower lows. Okay? Now, what's going to happen? You're going to correct in the same direction. Then what do you think is going to happen? Boom, you're going to get bullish move. So you're looking at bullish order block to be valid. So you're looking at buy side liquidity being taken out. This is why I said equalize, we're going to get smashed because there's relative strength index in what we're seeing. So you want to see the market trade up quickly. Does this make sense? Let me get your yeses. Does this make sense? Oh, come on. So which one leads? No one leads, okay? What you want to see them do is do the same thing. And the DXY does only one thing. So if DXY is bearish and Euro US is bearish, then you best know Euro US is gonna correct in line with GU. Okay? Because both of them has to do the opposite of what Pound US is doing. Okay? And now the reason why I don't know, I think I'm gonna take a lot of time going deep into the explanations why this happened. So basically the reason why this happens is one of them is seeking stops, okay? The reason why Pound USD will make higher highs and GU make lower lows is because one of the two currencies was seeking stops before reversing. So this is how you can use this to your advantage. Now, this was how, okay, let's go back in time to this buy, okay? Now, a lot of you guys watched as I called a buy on EU below this lows. Okay, a lot of you guys saw the setups when I called buys on EU from around this lows, and our TP was virtually equal highs. Okay, called buys from EU around this lows, TP was equal highs. The reason why was because the same time period where EU traded lower, Pound USD was making higher lows, not lower lows. That is your USDX SMT divergence. Now look what happened. EU came to reach for equal lows to take out the sell stops. Okay, so that is why you're gonna see one trade lower while the other trades higher, because you're seeking stops. Oh, come on. Yeah, so is higher time frame bias on DXY the same as other pairs? Yes. Any analysis on any asset class is the same for all asset classes. Forex, commodities, stocks, whatever. It's the same for all asset markets. Okay. Now, what I actually learned was divergence between EU and pound USD. But I just now discovered a theory, which I proposed live on this webinar, that we could use that for regional currencies. So now what I want to try out is NZD USD and AUD USD. So let's see if this actually works for regional currencies, or it is only for Euro, fiber, and cable. So let's look at AUD USD. Let's see if this happens. Where will their reversals in the marketplace? So basically, they all do the same thing. Doing the same thing. Okay, we're gonna catch you. Oh wow! So, right. So seeing signs. So I want you guys to all pay attention. Look at how AU and NZD were rallying. So from this level, we are gonna bring out the rectangle box and then draw up the market to get to this level. So now notice how when the market rallied on NZD USD, AUD USD did exactly the same thing. Made a pullback, exactly the same thing. Made an eye, exactly the same thing. Lower eye, exactly the same thing. Traded down, whenever I got to this low, the same thing, exactly the same thing. Until the market gets to this level, lower lows, higher lows, okay? Wow, this is crazy. So this actually works on correlated assets. Yeah, I basically said that. So this works on all correlated assets. All correlated assets proves my point. Okay, so this discovery is actually crazy. It's crazy. So once you know two pairs that perfectly correlate with each other, once you see divergence between those two pairs, then you know that there is an underlying reversal on the way. So if you're taking anything from this webinar, take that. All right. So for now, we're done with. For now, we're done with USDX SMT divergence. We made a supreme discovery. It's crazy. So in the same time period where NZD USD made higher highs, AUD USD made lower highs, and then the market ultimately reversed, which you can see here. When NZD USD made equal lows, the market makes lower lows, okay? And then the market reversed ultimately and range until the market reversed. And now, inside this massive range, okay, I want you guys to pay attention. Inside this very massive range, okay, notice what happened. The massive range, higher lows, lower lows, wow, this is crazy. And guess what happened? The market exploded. The market explodes. Inside this massive range, higher highs, higher lows, sorry, and then lower lows. And guess what happened? The market explodes again. This is crazy. This is actually crazy. So we made a fantastic discovery tonight, and I'm going to be working on that after the boot camp. So let's get back to, let's see, let's do something else. GU cancel. Okay, so daily time frame. All right, so let's summarize with this. No, not a session where divergence occurs. Okay, your entry should be London session. Although for AD USD, NZD USD, oftentimes it comes around Asia, but for EU and Pound USD entries around London. I told you guys about time zone, right? Such you guys, NZD, JPY, AD, oftentimes you're going to get your kill zones around Asia, then pound, euro, Swiss franc, you're going to get your kill zones around London, then Canadian dollar, and then USD, oftentimes you're going to get your kill zones around New York session. Yeah. Okay. So, what I'm actually trying to point out to you guys is the first thing you need to do is your higher time frame analysis. That is key. Okay. Higher time frame analysis is key in your trading because the institutions only reference the weekly, monthly, and daily time frames. Always seeking for liquidity, always seeking for levels. Okay. And if you pay attention to your higher time frame, it's going to seriously help you. So now let me show you an example. You could have been a bear from around this level when price settles to this level. Okay, with the mind that there is all lots of liquidity below this level, it's equals around this level. Okay. That was a good opportunity actually to short the market from that level. Why? Because there's going to be fund-based liquidity sitting around these levels. The funds trade only on higher time frames. The funds trading style is position trading. Okay. The first series of our bootcamp, I taught you the four duration of trades. We have the position trade, swing trading, short-term trading, and scalps. Okay, 4 types of trading: position trade, swing trade, short-term trade, and scalping. Okay, position trade is that the time frame you base your position trade off of is the monthly, weekly, and your execution occurs on the daily time frame. All right, so the funds trade based off daily time frames. And once you start to see the market make a move from a supposed support level, okay? So if you go back to October of 2017, there was a low from the market around this level, which 3 years later, the market, 2 years later, the market came back to that level. So that was a support level, okay? And then if we wanted to see reasons why the market should go bullish around this level, around that low, then long-term, we're going to seek liquidity above this high, okay? We want to seek liquidity above that high because it's going to be fund level stops resting above that level. So what you're going to look for is for the market to consecutively take out old highs, old highs in the marketplace, because you're now bullish, you're seeking for buy side liquidity. Okay, so you're looking for the market to take out old highs. So if you wanted to be a long-term trader, your first TP would be old high 1, 2, 3, and 4. Okay. Ultimately, you want to see the market get back to this level. Hopefully, I'm making sense to a lot of people. Let's see. Jane, check lower time frame to see if there's divergence. Yes, exactly. We've actually gone through this. So around this level, the reason why we want to see buys because let's go back. Let's look at Euro, US. Let's compare. I've gone this about 1,000 times on my boot camps, webinars, all of them. Okay. So let's see. Set charts. This is actually lagging. This is actually lagging. So remove this. Now from from 4th of September to 8th of October, Pound USD made higher lows, and then Euro from the same time period, okay? Euro made lower lows on your daily time frame, which is your USDX SMT divergence. And then ultimately the market trades up to this level, okay? Market gets to that level. And we spotted another USDX SMT divergence between Euro and Pound, okay? Euro made higher highs, the same time period where Pound USD made lower highs, which is why we sold GBP USD this week, simply using daily time frame relative strength index between Pound and EU. The original currencies both move exactly the same thing we saw on NZD USD and AD USD. So if any of you are going to teach that, make sure you give me that credit because I actually discovered that. Okay. So regional currencies paired with base currency, which is the XY, should correlate at all times. Okay. And if they diverge between each other, then there is an underlying reversal in the marketplace. Okay, take away from the webinar. So let's get back to what we're doing. Actually, so I actually want to teach going through candles, but I think I'm way overextended on this webinar because I spent a lot of time going through the USX SMT divergence. So let's just quickly cover the setups we gave this week. So if you go to GBP AUD, like I said, I started to see the market come down because going through candles, go to your 4-hour time frame. I actually wanted to teach this type of analysis today, but I think we were focused on relative strength index between regional currencies. So even if that is what you guys are able to take on, that is something worth it. So what I simply did here on Pound USD was cut through the candle from the left-hand side where the market showed willingness to trade lower, and then before the market ultimately went up, okay? So what I did there was cut across these candles to give us a point where we want to see the market drop, okay? And then the market made a failure swing, and failure swing, basically the market got to the higher time frame level, drop down, give us failure swing. This is why I want to see. Sorry, that was why I posted on the chat that everyone should wait until London session to execute on pound Aussie dollar, as the news did not give us the expected volatility in the marketplace that we wanted to see. And you can see we traded from that level very close to our first CP for 197 pips, actually beauty on that. And Euro odd actually came to, let's see, no, our first CP. Our first CP was around Sunday price open, which was here. So came close to our first TP, but we executed Euro odd. Okay, this was actually a breaker. Market made false high, spikes through that false high, trades lower, and then, like I teach you guys always, you always want to look for the mitigation block around that level. And mitigation block before the market spikes up is this candle here, okay? That is your mitigation block, and that is where you should look to execute Euro odd. But we were not focused at around that time on Euro odd, so we missed the setup. Which is why I said you should wait. Everyone should wait until London to get a retracement back to sell off. So you could have sold inside any point in this range and still made a lot of money, basically. So now the reason why I wanted to see Euro odd drop was because we were trading into a rejection block, basically two equal eyes candle, okay? Turtle soup, price turtle soup, that candle, took half front stops. Want to see price drop back down, Sunday price open. And then if you look below, there's a massive liquidity pool sitting below, which I feel price could potentially trade into next week. So it will be interesting to see what Euro odd does. And I'm going to be swinging my entry from around this level all the way into this liquidity pool. I'm looking at the market ultimately dropping lower, potentially a shift in market structure. We go to our monthly time frame. Let's see. We go to our monthly time frame. Shows there is resistance around that level. Okay. Monthly resistance is around that level. If you cut through candles, this monthly order block shows how very important it is, as it is resisted price for the last 5 years. So this candle is a very vital candle, as it has resisted price for the last 5 years, which makes me believe that there was a lot of institutional pressure in that candle. Okay, so I want to see the market trade bearish from that level. So from the monthly, holy shit, 28 messages. Okay. Let's see. Okay. All right, so this is where I want to see the market trade down. And then what else? I think that is all. I was able to catch a buy on AUD USD. Sorry, I was unable to call out to the chat. I felt it was absolutely not. I felt it was a rejection actually. So there was no big deal calling out that trade setup. So for next week, I think we could still go bearish on AUD USD. On Monday, I'll actually be looking to buy that if I feel like trading on Monday. I'm looking for a price to take out this liquidity pool and get to this level for me to then look for sells, okay? AUD USD. And so guys, that brings us to the end of our session. That brings us to the end of our session. I'll see you guys tomorrow, and tomorrow is actually going to be our last session for the boot camp, after which I'm going to basically vanish for a while to get my shit together and then come back to give you guys more sauce. So my voice is actually almost getting cracked. So everyone was able to make it to this Webby. I'll show you guys all. This session is recorded for those who have jobs and can't make it. So I'm going to send out the recording once it's done. I think we've gone so long. Okay, no, I'm actually just for a while. Okay, finishing just for a while. So thank you all for being a part of this call, and I'll see you tomorrow.